Hello everyone, George DeSantis here with the look at the market for the week ending February 5th, Friday, February 5th, 2021. And as usual, before we go any further, let me bring up this disclaimer, ask you to read it. Be sure you understand I'm not a licensed professional investment advisor, and this video is not an attempt to give any particular person professional investment advice. It is done for my own purposes, and it is posted as a YouTube video, and anyone can take a look at it and do with it whatever they will. We usually start off with a weekly chart of the S&P to get a general view of the market, and that's what we'll do. So here's a weekly chart of the S&P 500, and as you can see, we have the moving averages nicely situated above each other, the 4 exponential moving average above the 9 above the 30 weighted moving average. And when you do have these in relationship to each other like that, we'll usually conclude that insofar as the moving averages are concerned, we are in an uptrend. We're still in an uptrend based on, since way back when. Since way back here, the 4 has been remaining above the 9 EMA since back here in May 8th. This has not changed at all because the 4 never dropped below the 9. So that's been the case. Now, the parabolic was above the most recent bar last week, and we said, that may be an ominous sign, but because it was indicating a downtrend, and it was counter to what we were seeing with the moving averages. But now we have a flip here. We have the parabolic below the most recent bar, last week's bar. And we have a nice bullish week last week. It's one of the better weeks so far. So the market is looking to go higher. That's the bottom line. We have a target of 39.42. I calculated this target from the I did the Fibonacci extensions. I'll show you that on the daily chart, and we came up with a projection of or extension of 39.42. So we're about 56 points or so on the S&P away from the first Fibonacci extension or projection, which is 32.8. We'll deal with that in the daily chart. But continuing here with the weekly chart, we can see that the ADX, the average directional index, is still bullish, green above the red line, and the histogram is still trending up. So this is a very nice looking chart, a weekly chart, and we know we've had this divergence of MACD on the weekly chart for some time. We never got a sell signal on the 1939.9, and I've been telling you for weeks that I would wait until I see a sell signal on this 1939.9 MACD. I would not become too bearish. So let's turn to a daily chart, the daily chart of the S&P 500. Now we'll start off as usual, looking at the relationship of the moving averages, and we could clearly see that, as some people would say, the alligator is opening its mouth again, and we need to feed it. We need to buy stocks. I don't know who that person was who came up with this metaphor for the separation of the moving averages. But anyway, the alligator is hungry. So we do have an uptrend, of course, according to the moving averages. Parabolic switched to be below the bar here. This was on Tuesday, because this was Monday, Tuesday, Wednesday, yeah. This was on Tuesday. The parabolic switched to indicate we started a new uptrend. Now, last week I pointed out that we had, I think it was on Wednesday, I did one of these videos, and I pointed out we had a bullish harami candlestick pattern, a bullish harami, and we might just expect higher prices. Well, that's what the bullish Rami foretold, and that's what we have here. We had a nice uptrend. We had a good week. So where are we now? We're sitting at 2 standard deviations, pretty close to 2 standard deviations. And you can see, if we crunch the chart up a little, you can see that when we get close to 2 standard deviations, or when we hit it, or even when we go above it, we tend to pull back a bit. Not every time, but most of the time we tend to do it. See here, we pull back, okay? We came pretty close, we pull back. So when we get to 2 standard deviations, we might very well see a bit of a small correction. Now, there's no reason to be alarmed, especially since we have such a nice bullish chart on a weekly chart. So all I'm saying is, don't be surprised to see a small pullback this coming week, which might just offer us a better opportunity to pick up some more stocks, to do some buying. And we'll take a look at individual stocks later. Let's continue to look at the chart. So we have the parabolic below the most recent bar. That's indicating an uptrend. Now I did the Fibonacci projection or extensions from this low to this high, and we have an extension, a first Fibonacci extension target of 23.6%, and that takes us to 3942, about 56 points or so away from here. Okay, so that would be our first target, and notice that brings us very close, right smack on 3 standard deviations. As its chart is situated right now, we'll be at 3 standard deviations. Of course, that will change as price fluctuates, you know. Notice that also that the average true range, the 14-period average true range indicator, is now at 53 points, and that's exactly the projection we have here, about 56 points or so. So all of that is pretty consistent. Now, if we go down to the ADX on the daily chart, we can see that we did switch to a downtrend on the daily chart here when the DI minus broke above the DI plus, and we saw that the histogram dropped. You know, it continued to decline. But what we have now is we have DI plus crossing above DI minus. So, and we also have MACD giving us a buy signal on the 12.26.9. This is where we take our buy signals. This is where we take our sell signals. Now you might say, well, yeah, but you know, we missed this whole move here if we just waited for this. But if you read Alex Elder's book, one of the important things I learned from him is that one of the best buy signals is when MACD histogram begins to trend up from below the zero line. So buying on this bar would have been a more aggressive but more productive buy signal. You see, buying when MACD histogram trended up, and that's when parabolic switched as well. So these are all interesting phenomena here. Now, I want to take a look at Jake Bernstein's chart and show you something there. Now, remember, I showed you on Wednesday Jake Bernstein's chart, and one of his charts anyway. He has so many. But this moving average channel that he uses, and I've learned this from him, showed us that there was a conservative, and I said this on Friday, there was a conservative buy signal on the S&P on the weekly chart, because this is where you get your conservative buy signal. Right at the bottom of the channel, or at the 8-day, in this case the 8-week moving average of the lows. And sure enough, that held, that was very prescient, and it showed us, and then we followed with a nice bullish candle here. So that's what Jake Bernstein's chart showed us, and it kept us from becoming too bearish on this market. Let's turn to some charts, take a look at some individual stocks, etc. So first of all, let's go through some stock charts. in other words, charts that I have from stock charts. So this first one here is Apple. You could see that whenever Apple is pulled back into that channel, a similar channel to Jake's, between the 9 EMA and the 30 EMA, it tends to find support and rally. It does the number of times, right? And it did it again recently. So I do own Apple. I bought it back recently. Um, and we'll see where it goes from here. Let's look at the new high, new low index. You could see that the new high, new low index is trending up once again, and you could see the MACD of it is also trending up. Now on Alex Elder's impulse indicator, you can see on the S&P, this is a daily chart. You can see that we have green bars, and when we have green bars, we're allowed to go long. We're not allowed to go short. That's basically what it is. We should only go long or hold. So this is bullish, okay? Very bullish. The McClellan oscillator has spiked up and become pretty bullish here. It was trending down for a while, and now it's pretty bullish. The percentage of stocks of the S&P 100 above their 200-day moving average, it's still remaining in pretty bullish territory. And if you look at the weekly version of it, and I have to say no thanks to this, if you look at the weekly version, you could see it still remain pretty bullish here. So those are what we have from stock charts, and the last one is really a ratio of the Fidelity Capital Income Fund versus the Vanguard Treasury Fund or bonds or whatever, and you can see that that ratio remains the same. In other words, stocks are being bought, not bonds, at least according to this. I think I saw some contrary evidence to that, but anyway, so that's insofar as the stock charts are concerned. So let's turn to some individual stocks and ETFs. I use, as you know, Shaken Analytics. Many of you know that. I love it. I've made a lot of money because of its use. Now, what I've done here is I've taken some of these watch lists that I have, these user lists, and I've looked for stocks that are pretty much oversold, okay, and mostly bullish or very bullish stocks that are pretty much oversold. So let me go through a few of them and show you what I mean, okay? Now, according to the stocks are rated by their power gauge rating. The most significant ones, the best ones, are the top, and they're rated all the way down to neutral, all the way down to neutral. So I like to own the ones, and in fact, I do own some of these at the top. I did some trading last week. I bought and sold some stocks and closed some positions to take some gains. But usually I will look for the stocks that are up on the upper part of this list, bullish and very bullish stocks. So look at what we have here. Let's start with Alcoa. Alcoa, the money flow has been ticking up. In other words, it became on this downtrend here, there was a lot of selling of Alcoa. Then it became oversold here. It became oversold in this region, and it bumped off the 200-day average, and now it's bumping off the 21-day average. So Alcoa, the top of the list, was up 2.9%. This is a stock that I own. Oh, I did own. I'm not sure if I own it right now. I might have traded it, but it's one that I will look at again, definitely. Now, AMAT, I traded, and I took some gains on it, and I would look to buy it again. It's oversold. This is Applied Materials, a semiconductor. You see, it's sitting right at the 21-day average. And according to Mark Shaken himself, I sent you a video by him. When you have relative strength so strong, according to him, and stocks became overbought and then they pull back to the 21-day average, that's a good buying opportunity right here. And we have found that to be the case. Those of us in my family group, we have looked at many stocks, and when they pull back here to the 21-day average, it's usually a good time to be taking a serious look at it. Money flow has decreased, but it looks as though it's getting ready to move higher. Best Buy. Best Buy was oversold. It's ticked up a bit. The relative strength has fallen off over here. It's become negative, but it looks as though it wants to bounce off of the 200-day average and the 21-day average. So it's one to consider. Um, this building products company oversold and ticking up, and it's bouncing off of the 200 and the 21-day average, and it's very bullish and so on. So it's one that I would consider. It was up 2.5% on Friday. Um, this is an infrastructure company. It's a construction engineering, and you can see it is oversold still. Money relative strength is still pretty strong. It's very bullish, and it's sitting right at the 21-day average. Again, when stocks do this, pull back here, especially when relative strength is strong, it's usually a good buying opportunity. I'm just going to point out a few more, and what you can do is you can make a list or take your camera and take a picture of it, your cell phone, and check them out. MKSI, I had it and I think I sold it. I'm not sure. I think I might still own it, but it is oversold and it hasn't ticked up yet. It's indicated early in terms of overbought signal, oversold signal rather. So I believe I still own it. SIVB is a bank, and you can see it's been oversold and it was trending up from the 21-day average. You see what I was mentioning before. When a stock does this, relative strength is strong and it's oversold and hitting the 21-day average, that's your buy signal right there. This is a solar ETF, and it's sitting right at the 21-day average. Relative strength is pretty strong, and it's oversold. So it's been up 1.5% or so last week. So I believe I bought that again. TDC, oh, that's Teradata. I got this from stocks that had a big run up in, in Barron's this week. So I wouldn't buy it here. I would wait for pullback in order to buy it, but I'd keep it on my checklist, you know. I'd keep it on the checklist. So if it pulls back, you see it changes personality here, and it became positive or strong in terms of its relative strength. But I wouldn't buy it here. It's too high. If it pulls back to about $30 a share, maybe a good one to look at. And let's take a few others. For example, Archer Daniel Midlands, looking very nice, except for the fact that money flow is negative here. But it seems to be trending up. However, it was oversold and it bumped off the 200-day average, and it was up over 1.5%. Now the ARKs, as you know, I still own these. ARKK was oversold, ticking up. ARKW, I have that too. And you could see the ARKs have been really, I don't know how long this is going to continue, but they've been on a tear. See, this is Cleveland Cliffs, and that's been oversold, and it's bumping off the 21-day average. I like this one right here. It was up 4.5, a little over 4% on Friday. This looks like a nice one. This fits the bill. The relative strength is strong, except for money flow is weak, but relative strength is strong. It's oversold, and it pulled back to the 21-day, and it was up nicely here. So this is one that I would certainly put on my short list. I won't look at too many more, but I own PWR. You can see it's been oversold, and it's up a little on Friday. What else do I own? STRO, which is the biotech, and you can see that it was oversold at the 21-day average and up 3.5% on Friday. And I own Target, of course. I told you that. Target, I have a nice little gain. Okay, folks, I think I'm going to call it a night and get some shut eye. I don't know who is going to win the Super Bowl. Nobody knows. Do one. But I'm rooting for Kansas City. I think I think what's his name? Um, Brady had enough. You know, he won six of them already. Give the young guy a chance. Have a good night and enjoy the game.